All right, traders, investors, even you, degenerate gamblers, welcome back and thanks for joining me. My name's MJ Bullish. Let's get started.
Yeah, RA super church, I'm switching filings. Pushing this off white MTM coupe, it look like cocaine. Top down track phone peeping, got a baddie with some good brain. Running up these digits, know this money ain't a damn thing. She like how I roll, she won't let me go. Yeah. I have diamonds froze, money stacked and rolled.
So first thing we got to talk about is Jeremy Grantham warning about a super bubble that will pop soon, tanking stocks 50%. Is this realistic? It's possible. Anything's possible. We never know, but these salacious headlines are designed to put people in a state of fear, sell ads, and get you to sell your stocks. And I can prove to you why this is really just a salacious headline. If we take a look at Grantham Mayo and Van Otterloo Company LLC, or they call it GMO LLC, who have $63 billion under management. This is their 13F filing. They have just recently, as of December of 2021, bought very large positions in Taiwan Semiconductor, Lam Research, Visa, Cyrus One, Darling Ingredients. They have made some sales and they are still holding a good amount of stocks. If you want to know exactly what they're holding, Microsoft, Apple, UNH, Coca-Cola, USB, Oracle, they have a very nice portfolio of stocks. They have a considerable amount of stocks and they've just bought new stocks. All right, so basically, don't be shaken out by these unexpected downturns in the market. There's going to be constant news over the next few weeks that is going to be aimed at getting retail investors to sell their stocks, whether it's threats of war, spread of you know what, or anything else of that nature. The hedge funds, the larger players, the whales in this game know that these fear tsunamis cause massive sellings, mainly on the part of retail investors who in the short term are taken advantage of because it just creates a buying opportunity for the larger investors. Like if we take a look at the Nasdaq right now, I have a target for a possible low that will put it about 262 on a QQQ. So from all-time highs down to there, that is a max 37% correction. So there is a possibility of a much larger correction, but it's nothing that's going to shake me out of the market and make me lose my current positions, make me sell my assets. Right now, I do want to talk about a couple things as we look at Nasdaq. It's been really choppy. So we're trading in a range right now. If you look at, say, from the 14th of January, we're trading in a range here. Okay, so I'm going to draw out that range just to give you all a little bit of clarity. Okay. So we have a range between this zone. It could have been a lot of profits if you shorted here, bought here, sold here, bought here, sold here, bought here. We're in a range zone, and we have a consolidation going on in the larger street, which is causing a wedge pattern through here. So what usually happens in wedges is there's going to be some consolidation. It's going to bounce on these resistance and support levels, and we should either get a massive move to the upside or downside. Why do I think it's the upside? If we look at the bottom here, if you see on the day is 125, 126, And if you look at this date, which is 2/14, about 2 weeks apart, you see that we're making higher lows. All right. You see why I got that green bar? Yeah, we're making higher lows. And if you look here on the RSI is making lower lows. It's going down. So what we call this is hidden bullish divergence. So hidden bullish divergence gives you a hint, and this isn't always 100% accurate, but it gives you an indication that we could be seeing movement to the upside in the future. This hidden bullish divergence is very important, and it only really started on February 14th. All right. We made a very definitive rejection from the lower area. So could we bounce and rip through this area of resistance and maybe go up to like some area around 377 or 388? It's possible. I have already taken long positions and I will be holding to see what happens. All right. The best thing you can do is be invested in the market in the long term. And what do I mean by long term? If you zoom out over the long term, the market continues to go up. Okay. So we had this correction here for, what happened in 2020. We took off. We had several other corrections later in that year. We've had corrections. This is pretty deep. This is a deeper pullback than we've seen. But the market in general is still in bullish formation. It's not doing something like, this yet. It's not going down here. And so our overall thesis on the market hasn't changed. If we zoom out even more, you see that the market has definitely been bullish, extremely bullish since, 2011. It's taken off. So this little bit of area right here, it's just shaking out weak hands. Okay. So we got that wedge pattern forming. We should lift off eventually. You just want to be in position to take advantage of those gains. All right. But yeah, that bullish divergence we're seeing is on the 4-hour chart. Let's look at the volatility index. The volatility index did reach a peak on the 14th. It went up past 30. Okay. Anytime you see the volatility index reach these highs, like so here, I'm gonna go ahead and highlight them all for you here. Okay. Here, you see the pattern I'm doing, okay? Here, I'm gonna keep going just so you all understand. There, yes, where's the next one? Where's the next? Exactly. There as well. So all these areas, these are areas where you want to be entering the market. When the volatility index peaks, people are fearful. It is the absolute best time for you to be entering the market in longer term swing trades. So like take a look at this, for example, 1129. All right. If we go back here and look at the S&P 500, if you would have entered the market at 1129, you would have entered at 463. You would have been able to sell for at 479. Okay. So that could have been a good swing trade, or at least a good time to enter the market at a low price. Because our main thing is we want to hold these positions for a longer term and get gains and actually maximize our gains using these assets. And to make this picture a little bit clearer, this is a chart that shows volatility index range and the gains that can happen after 500 trading days if you roll forward. So if you go forward a year, so say you buy at 25 to 30 VIX range, the next year you should be looking at 11% gains minimum, 8, maximum 18. If you're buying at 50 on the VIX, which we have hit in the last 2 years, you could see 100% gains. That is possible. And this is very, very interesting information that can help you make massive gains by just buying when everybody's fearful. All right. The volatility index is a fear gauge. So you kind of want to be moving and trading opposite of human nature. That's how you're going to make the most profitable, meaningful trades and really do what you need to do to help your family, to get your Lambo, to get your beach house, whatever you're looking to do. Here's another chart that I find interesting right now. This is the net put value. So puts are at an all-time high right now. And puts are option contracts that are used to hedge your portfolio in case of market turndowns. Or you can use puts to just short the market for quick trades. So when puts are at a high, that means fear is at a high. So right now with puts being this high, this is a very solid indicator that fear may have peaked, okay? And that we could see more upside in the market in the coming days, weeks, or months, all right? That's about it, people. I want to keep it pretty simple. Make sure that you are prepared for downturns. I think this is a time to be trading with some cash on the side. So you don't want to be buying all at the same time. Like when you see VIX high, like as traders, is we can try our best, but we'll probably never nail the exact bottom of the market. But you'd want to average in as the market's falling, okay? And then be taking profit, as it goes back up. If you're trading, if you're long-term investing, you just want to get in low and be holding for years, okay? Your goal is years. So a couple of stocks I'm looking at. I'm looking at Square right now. I'm very interested in that. I'm looking at NVIDIA. Right now, it's making some higher highs. It's finding some support. We could see NVIDIA, doing something kind of like this. All right, following a channel all the way up. I'm looking at United Health. I'm definitely looking at Target as well. All of these things are very, very low and at great buy points. Also Costco. All right. Now, don't go entering these things just willy-nilly. If you need a little bit of help and you want to get in at the perfect time, just reach out to me and I can help you enter at the perfect time. This is something that I do. I have a chat on Discord. Everyone in there is killing it, and I'm really proud of some of the students that are making amazing, incredible, life-changing gains by just strategically entering the market using technical analysis and indicators. May the markets be with you, and wishing everyone great trading and a continued successful 2022.
Lamborghini drive, VVS is on my neck. She like the way my time is flex. Metal